Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York. It is Thursday, 8th day of June, 2017, and this is the Daily Report for Gold and Silver. Following testimony given by James Comey today, we have seen the precious metals markets come under pretty strong pressure, trading hard to the downside, and equities recovering on the day. First to gold. Gold has closed off almost $12 on the day, $11.60 to close at $12.8170. It traded to a low this morning, though, of $12.7350 and a high of $12.9150. Of course, we did have an active trade on. We had moved our stops to protect profits just the other day. And in fact, that stop did get hit today, and we did pull profits on the second leg of our long gold trade. We'll go over that in detail, of course, as we pull up our technical studies during the show. Net change on the day, down about 0.9%. Over to silver. Silver also trading dramatically lower, losing well over a full percentage point to close at $17.43. It traded to a low of $17.28 and a high today of $17.68. So traders, the first chart that I do want to look at today is a very short-term study chart of gold. Each candle represents 4 hours of trading activity, and you can see the dates here down on the bottom of the screen. If you recall, this is the second leg of our trade. The first leg of our trade we bought in at $12.25. As the market moved up and we got closer to expiration, we were in a June contract. We sold or covered the June contract and simultaneously bought into an August contract. Now, for the first leg, we got out with $3,500 per contract profit, pretty reasonable profit. And then at the same time, we put on a position at roughly a 1264. That would be this area right in here. And when we put that on, we definitely saw the market move to higher ground. And as it moved to higher ground, we trailed our stops up to the point in which earlier this week, we really tightened our stops to just below 1280 right in here. So when we take a look at today's activity, which begins here, we can see that there was underlying and dynamic pressure for the first 4 hours of trading today. The market then made a lower low, but began to stage somewhat of a recovery coming off of those lows, taking it back to about 1282 on the high, only to close today at 1281.40. That was our effective close. So in essence, we got long at 64. I'm going to count this out at 78 because we put it below 1280. So the differential between 64 and 78 is our profit on this second leg. So now the important question we need to ask is, if we go into some sort of a extended sell-off or correction within the market, even given that I'm still overall bullish in the market, where can we expect price support to come into the market? Now, given that this market is absolutely trading on fundamental events, we still have to look at it in a technical manner because that's the only thing we can absolutely discern. And to that end, I have created a basic fib retracement, short-term retracement that really goes to the beginning of this rally when the market came down and tested roughly 1215 up until this most recent top, which now in fact can be construed as a double top. And our basic fib retracement, our 23% retracement level, takes us to 1278. And we have absolutely breached that this morning and then closed back above it. So that is a particular price point we want to look at. However, if this selling continues in any extended manner, we want to look at absolutely the 38% retracement level. That comes in at around 1266. And then the deepest level that you would expect to see on any kind of retracement would be a 61.8% retracement, which comes in at 1246. The fact that we closed above the 23% retracement is only important if we see this market begin to get bid up from this area. However, my sense is that we could, with all probability, see this market continue to track lower. And if so, I would look at 1266 as an area that we would look to find some potential support. For the time being, obviously, we are going to go in overnight flat and probably over the weekend flat, and that right now, I believe, is our best bet. In other markets that we follow, we did see some underlying strength in the dollar index today, closing up almost a full 0.25% at 96.93. We also saw a pretty dramatic recovery of U.S. equities, which had been trading under pressure, closed nominally, marginally higher today. Dow Jones Industrial Average closing up about 8 points to close at 21,182. Standard & Poor's also closing moderately higher on the day. I'll call it fractionally unchanged at 2433. And lastly, the NASDAQ Composite Index absolutely did the best of these indices, closing at 6320. So traders, at least for now, it seems as though market sentiment has spoken in terms of a basic shift in the overall bullish sentiment that was in the precious metals complex, gold and silver specifically, and the sideways trading action that we witnessed recently in U.S. equities. We are looking at a weekly chart of the NASDAQ Composite, closing at 6321.76. We can absolutely see, and especially if we blow this chart up, that this close is above the former record close of last week, which came in at around 63.20. We are now 63.21. Yes, it's only 1 point, but more importantly than that, over the last couple of trading months, at least since the middle of April, we have seen on a consistent basis this market close week in and week out at a higher closing price than the open. That except for this one red week or red candle that came in the week of the 15th of May. We're definitely at a new price high, a new record high, and my sense is that we are still destined to see the NASDAQ Composite move to 6,400 in the near future. And traders, as far as the dollar index goes, once again, we are looking at a weekly chart. We had some strength come into the dollar today. Overall this week, we are seeing a green weekly candle, meaning that assuming the market doesn't sell off tomorrow, we will see the dollar index close higher this week than it did on the open. And in terms of resistance, which I believe is a little bit easier to define right now, I'm going to put it roughly at 98, 97.96. That is our 23% retracement area. Now, in terms of support, we're still a little away from major support, which sits at 94.31. And as I am on record as stating, I believe that we have some pretty strong support at 96 on the dollar index. Traders, no doubt, today's testimony put some underlying pressure in the precious metals markets. The perception was, at least according to the majority of the market participants in the way they cast their votes, believe that the statements coming out of Comey do not present any evidence that would be impeachable for the current administration. Therefore, because that was kind of taken off the table, we saw a release valve in which we saw money which had flowed into safe haven assets such as gold quickly move back out when that became the state of mind, I should say, as market participants. And then we also saw equities get bid higher and continue on that upward trajectory, which has been the overall characteristics in the most recent trading environment that we have seen. We will go into Friday flat with no active trades, having pulled profits on leg one, leg two of our gold trade, and pulling profits on our silver trade. We'll begin to talk about our strategy and next move tomorrow, as well as the beginning of next week. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekend review. Bye-bye.